Ready when you are, Madam Mayor.
Okay, well, I'll call this audit work session presentation to order. And I think we'll just turn it over to our auditing firm.
Perfect.
Welcome, thank you.
Thank you. Thank you, Madam Mayor. Members of the council. My name is Grant Todd. I'm an audit partner with Altman Rogers and Company. This is the first year that we performed the city's audit. The city went out for bid this spring, and we were fortunate enough to be selected, so we appreciate you guys supporting a local firm. We have 3 offices. A little bit about us. We have 3 offices across the state. Our main office is in Anchorage. That's where the audit team that performed the audit is based out of. So again, we appreciate you supporting a local firm. We started the audit back in April, so just a little background about the audit. Due to the restrictions of COVID, we did the audit remotely, which is obviously not the ideal way to do an initial audit, but we got through it. Obviously it took a little bit of time, but through lots of hard work from our team and the city's finance department, we got through it. The fruits of our labor are in front of you. There's two documents: the CAF, or the Comprehensive Annual Financial Statement, and then the letter to the governing board, which is required communication with the financial statements. So just a little background about our audit. As part of the audit procedures, there's a number of things we have to do. So we did a financial statement audit, and then due to the amount of money you spent of federal money, over $750,000 of federal and over $750,000 of state money, we performed a federal single audit and a state single audit. So technically we performed 3 audits all at the same time. And I would say, as we're going through this, I know obviously it's a pretty big document. We're not going to cover it all, but if you have any questions, by all means, interrupt me. You're not going to hurt my feelings. So like I said, we performed 3 audits. We'll get into the audit opinions and the results of the audit here shortly. As part of our audit process, we tested the internal controls of the city. An audit is a risk-based, or we take a risk-based approach based on auditing standards. Since this is the first year of our audit, we had to rely on interviews with management and reviewing prior year financial statements to see if there was any prior year findings or deficiencies. We also met with your prior auditor, discussed their audits, the results of their audits, and that helped kind of form the basis of our audit. We focus on more of a revenue. Revenue is always considered a higher risk area, the potential to misstate revenue. In a local government, that risk is somewhat mitigated, but we still take steps to ensure that revenue isn't misstated. But essentially, when we give our opinion, we say the financial statements are materially correct. So we do audit procedures to ensure that, or in order to base our opinion. So as part of our testing, we tested a number of the internal control systems of the city. We tested your cash disbursement system, essentially accounts payable. We took a random sample of 40 across the whole population. From a statistical standpoint, if we test 40 transactions and find 0 errors, it gives us about a 95% confidence that your internal controls are working as designed. Auditing, once again, is risk-based. You wouldn't be able to afford an audit where auditors looked at every transaction, so once again, we just take a sample and place reliance on it. We tested the internal controls over payroll, cash receipts, credit cards, utility billings, and harbor billings. We've seen samples of 40 across those populations. We found 0 errors. We also, based on our audit, we give an opinion that says the financial statements are materially correct. Each opinion unit, which we give an opinion over the government-wide financial statements, in that is the governmental activities and business-type activities. The governmental activities would be your general fund, special revenue funds, capital project funds, and then your enterprise funds in total. So we'll give 2 opinions over the government-wide financial statements, which we'll cover shortly, and then opinion over your major fund. In this case, it's the general fund. We give an opinion over your major enterprise funds, Harbor Electric, SMIC, and healthcare, and then all your other funds, the non-major special revenue funds and capital project funds, and your other non-major enterprise funds and your agency fund are all rolled together to give an opinion over those. And so each of those has their own different materiality, so we audit to different levels across each of those. With each of those, we also look at material transactions, so we set a materiality and then we lower that and look at material transactions. So as part of our audit, we also looked at over 50 material transactions across those opinion units to make sure that they're coded correctly, that it should go to this fund and to this essentially object of supplies, equipment, things like that. We also look at the procurement process. The city has a requirement that transactions over 30,000 have to go to the council for their approval. So we looked at a large number of transactions to make sure that they were in compliance with city code and that met federal laws and regulations. So overall, during our testing of that, we found, I guess I should say, the only transaction we found one overtime error. There was an error related to overtime. We pulled an additional sample just of overtime hours paid. We pulled an additional 20 transactions related to just specifically overtime and found no errors in that. So once again, one error out of 60 gives us about a 93 to 95% confidence. So we were able to place reliance on your internal controls over payroll. So overall, even though we don't report on your internal controls, it says in one of our opinions we don't place reliance, we don't opine on the financial or the internal controls. We have confidence based on our audit that the internal controls are working as designed. We tested 2 major programs for compliance purposes. That is a risk-based approach as well. The federal government sets the standards for us to follow. We have to audit at least 20% of the federal expenditures in total, or we have to audit all high-risk programs. So we ended up auditing 2 for state or for Fed purposes, and for state compliance purposes, we audited 4 major state compliance programs and had no what we consider significant deficiencies or material weakness. No findings over compliance. We did end up with 2 financial statement findings, which we'll cover shortly. So, with that, I guess before we jump into the financial statements or our opinion, I guess I'd ask if there's any questions related to kind of our testing or our audit approach.
I'll look and see if there's any questions specific to the testing or the audit approach. I guess I have a question. So most of how you did it obviously was remotely. So what would you say did you just ask the folks, say like, hey, pick 10 of these from this type of transaction and email it to us, or did you tell them specific things to pull?
We gave them specific. So before the audit, we got a population of cash disbursements of payroll. Each of those systems that we tested, and then we used a random number generator to generate a sample of 40, with usually 10 to 15 additional in case any transactions are voided. And then those were uploaded to us, the check, the support, anything like that, or the paycheck, the personnel file were uploaded to a secure site. We tested those, then went through if there was any questions or things like that. So we did that electronically or on the phone. As part of it, we have to do a walkthrough. The first transaction we looked at, we called the AP clerk for payroll, have them walk us through the transaction, talk about the internal controls so we can document that, make sure that the system has been adequately designed.
Great, thank you.
Mm-hmm.
Does administration have any questions?
Also, as part of our audit procedures, we're required to meet with at least one member of the governing board. We talked to the mayor, discuss our audit approach, see if she or anyone else on the council had any concerns. Talk about fraud. Any concerns that the council might have about our audit approach or audit areas that need to be looked at. So we had that discussion at the start of the audit. And same thing, if there was any concerns, that would have driven our audit approach a little bit as well. Okay, so in this, we're going to flip to the second tab in the CAFR, the larger of the 2 documents. We're going to flip to the second tab. The first tab, introductory section, little letter of transmittal, tells a little bit about the city, certificate of achievement, things like that. But first page in the financial statements tab is the independent auditor's report. It's 3 pages long, but I'm going to talk about 4 sentences. So it just says, very first paragraph, we've audited the financial statements of the city of Seward as of December 31st, 2019. Second paragraph is important. The second and third paragraph are important, and I always like to point this out. It says, management is responsible for the preparation and fair presentation of these financial statements in accordance with accounting principles generally accepted in the United States of America. So management's responsible. Our responsibility in the third paragraph is our responsibility is to express opinions on these financial statements. So I always like to point that out. So truly the auditing firm, we work for the city council. We're hired by the city council. Our engagement letter is addressed to you. So we technically work for you. we audit management. It's management's responsibility to essentially give us the financial data and to prepare the financial data, and it's our job to audit it and opine on that. It does say in there that we did not audit the financial statements of the medical center. They get a separate audit by KPMG, and we use that financial data and include it in your financial statements. So on to page 2, the middle paragraph says opinions. In our opinion, based on our audit and the report of other auditors, the financial statements referred to above present fairly in all material respects, the financial position of the city. Essentially, in layman's term, that means we gave you an unmodified audit opinion across all your opinion units of the financial statements, which is the best audit opinion you can get. Essentially, there was no modifications, is what that means. So, like I said, there's a bunch of other jargon, but I won't bore you with that. On page 4 is the start of the management discussion analysis. When I do these presentations, I like to point out that if you're short on time or a constituent comes to you and says, hey, this is a 180-page document or 160-page document, where would I start? I would point them to this. The MD&A is essentially considered required supplementary information. In order for you guys to get a CAFR, the CAFR is actually submitted to the GFOA, Government Finance Officers Association. They go through it. It's essentially graded to make sure it meets all the requirements, and you guys get a certificate of achievement. There's only, I think, 26 governmental entities in the state that get a certificate of excellence each year, and you guys are one of them. So, tip of the hat to management. Year after year, you guys are getting this certificate of excellence. And one of the requirements is the MD&A, and essentially it's just word form of the financial statement. It's a good summary, kind of a quick summary. I mean, even though it's 15 pages long, it kind of takes the financial data and condenses it into kind of a usable form. Not a lot of people can pick up these financial statements and fully understand them. So this is a kind of a helpful place if you ever have questions from your constituents and want to educate them a little bit. And once again, that is prepared by management. On page 17 is where the actual financial data starts. Statement of net position, it's 2 pages. Essentially, it is the balance sheet of the entire city. So once again, there's governmental activities, which general funds, special revenue funding, capital project funds, and then the business type activities essentially is your enterprise funds and internal service funds in total. And once again, this includes all of the current assets, as well as long-term assets, deferred outflows, which relate to essentially pension, and then a deferred loss on refunding of a bond. And then on the second page, page 18, is your current liabilities, long-term liabilities, debt, pension and OPEB liabilities, and then net position. Bottom of page 18, unrestricted net position across your governmental activities is $6.6 million, and unrestricted net position is about $20.5 million in your business type activity. Once again, this is, in my opinion, a less important piece of your financial data than what we're going to cover on the governmental balance sheet. Because once again, this includes all of your long-term stuff in here. There's again a liability for your net pension, the net pension OPEB liability, an $8.8 million liability. That isn't anything that you guys are making payments on. It's you're making contributions into the PERS plan, but that isn't the liability that's coming due. Your bonds payable, those are stretched out over the next 20 years. So there's it also includes your capital assets, $60 million of capital assets, or $196 million, I'm sorry, of capital assets, things like that aren't current financial assets. So same with the statement of activities on page 19. This is essentially the profit and loss of the city, but once again, it's on the full accrual basis. Once again, this includes depreciation expense. It has debt payments taken out, things like that. So even though it's important, it's easy to kind of get somewhat confused if you look at it, without knowing all the details. And once again, I'm happy to answer any questions, and we'll go into a little more detail on how these numbers are attained. Notice that the governmental activities, so the third column from the right down at the bottom, a change in net position of $3.5 million loss. Essentially, during the year, when we took over, like I said, this is our first year, we got to looking at the internal service fund and noted that essentially all of the activity from the motor pool internal service fund is related to servicing the business type activities. In past years, that the capital assets for the motor pool were split out between governmental and business type activities, and we said if it's all being used by the business type activities, we transfer the capital assets over into the business type activities. So essentially, if you got rid of that $3.5 million transfer, your governmental activities essentially would have a change of essentially in that position, essentially zero. And then business type activities had an increase of $9.4 million. Page 20 is the governmental funds balance sheet. Again, you only had one major fund for reporting purposes. It's just a calculation that we do when we're preparing the financial statements. And all of your non-major governmental funds, special revenue funds and capital project funds are rolled together in the aggregate. Total assets of $14.5 million. 12.2 of that is cash. The rest are, most of it is taxes. Current liabilities of only $1.5 million. So really, a current ratio, almost 10, which is, very solid. And then, kind of, usually people ask us, governing bodies usually care about unassigned fund balance. So the very bottom right corner, or 3 up from the bottom, in the general fund, $7 million unassigned fund balance, essentially fund balance that can be used at, the city's discretion. And that equals about 61% of current year expenses, which were, $11.4 million. So essentially 7 months worth of reserves. I know that's always an important calculation for a lot of people. And once again, obviously the disclaimer caveat is, this is as of 12/31/19. The downside is, we're 10.5 months through the year. But as of 12/31, that was the operating, the unassigned fund balance. And then Exhibit C2, page 21. Essentially, that page shows essentially the long-term assets, long-term liabilities related to the governmental activities. So $56 million of capital assets.
And that does include the hospital and the long-term care facility?
Those would be presented, I think, in the enterprise fund.
Okay, so this is just, so what would these capital assets be? Is it any city facilities? Is it City Hall? What?
Yep, City Hall. So anything not related to the business type activities. So, I don't have the exact list on me, but so if you look, so it's probably easier to look at page 24, and so you can see middle of the page under non-current assets, capital assets. So, the electric utility has almost 23 million of capital assets. So that would be anything related to electric. Harbor has 37 million. SMIC, 50 million. Healthcare facilities, the hospital, I'm guessing is probably in that number. So yeah, City Hall would be more of a governmental, would be reported on the governmental side. Your streets, roads, sidewalks, infrastructure, things like that.
Okay.
Yeah, I mean, you've got $71 million worth of buildings, so essentially anything not specifically related to those enterprise funds would be listed on page 21. And if you wanted to see a specific detail, we have a copy, or management provide you a
Okay,
copy
thank
of
you.
more detail. Yeah. Yep. And then down at the bottom of page 21, just a breakdown of, like I said, your GO bonds, and then your share of the debt pension and OPEB liabilities. I'm sure you've had that, talked about that in the past. Essentially, like I said, that's the city's proportionate share of the unfunded net pension and OPEB being other post-employment benefits related to your PERS members. Page 22 is the statement of revenues, expenditures, and change in fund balance, essentially the profit loss statement for your governmental funds. General fund had revenues of $12.8 million, expenditures of $11.4. Transfers in, transfers out were almost identical. So an increase in fund balance of $1.5 million, and then your non-major funds in total had an increase of $106,000. Exhibit D2, and this is, as I was saying before, the $3.5 million loss in the governmental activities, and we're talking about the statement of activities. This shows essentially where that $3.5 million loss came from. Governmental funds had an increase of $1.6 million. Depreciation expense accounted for most of this $2.8 million loss, the second number down. The depreciation expense of 2.7, the deletions and reclassifications net of 600,000, and then capital outlays, 464,000. Change in the proportionate share of the unfunded net pension liability essentially was an increase. The liability essentially decreased, so that's reported as a reduction of expenses of $1.5 million. And then, as I said, the transfer of the internal service fund of the business type activities was another $3.5 million. So that essentially was caused, most of that decrease. On Exhibit E1, page 24, is the statement of net position, or essentially the balance sheet for your enterprise funds. As I said before, there's 4 major enterprise funds. The non-majors are aggregated into the non-major enterprise fund. Obviously a lot to look at between pages 24 and 25. I apologize, that's just, it's kind of small writing, but a lot of information presented on here. Unrestricted net position for each of the funds is listed on the bottom of page 25, with the third line up from the bottom. Electric has unrestricted net position of 8.1. Harbor has a deficit of 862,000. SMIC unrestricted of 75,000, and healthcare facilities $3.8 million. And then the non-majors in total 6.2.
Yeah, and the 8 million's gone way down since that was, I know they've been addressing that.
Page 26 is essentially the profit and loss for the enterprise funds for the year.
Well, let me
Sure.
pause and ask a stupid question, just because. So, talk to me about, so the healthcare facilities, that 3.8 is just referring to Providence, correct?
A majority of that would be, because once again, we take KPMGs, and I don't have the specific breakdown, and I'm sure I should have that number, but yes, most of that is related to the hospital.
Yeah, so it looks like payable to Providence, so we paid them last year. Is that what that second number in that column says? We paid Providence $6,299,000.
That's how much is due to them, and that would be probably from, and I apologize.
Because then I go back to, the transfer letter, and I see really a dire paragraph about Providence. So I'm trying to highlight that as we're looking at this.
And this, and I apologize, I don't have that answer. I'm pretty sure, because once again, we take the audit, so the hospital is audited by Providence.
Mm-hmm.
I am guessing, Sam, do you know off the top of your head? I hate to call on you on this matter.
All right, well,
and I can look.
You don't have to have an answer on the spot. I just think as council, we need to be hyper aware, because I know Providence with this year is also going to be having some struggles and some income issues.
I can find you an answer where that number comes from.
Okay.
And like I said, any other fund I could tell you the answer for. It's unfortunately there's your portion and the KPMG audit, and since I really dug into the fine details, and granted I reviewed our work papers today before I came, but I didn't get into that detail on that number, but I can find you an answer and email you
And
tomorrow.
I didn't ask you ahead of time, thanks for.
But it does seem odd, I wouldn't know, couldn't tell you what that liability would be on the city's side. And maybe Scott, you've got an answer.
We get pretty big capital requests every year.
I know that Robert said that they paid that down to about $4 million just this year. They've really been working at
About half.
that number down.
Okay.
It hadn't been moving for several years when I started, and then they hired
He's doing a great job with it.
Yeah, okay. Well, I just know that it talked about the Medicaid reimbursement rebates year was an issue, increased costs related to staffing at Seward Mountain Haven, failure of cost-based reimbursement rates to keep pace with medical inflation, and then I know this year they've had to have one whole lodge empty during COVID, which is key for Mountain Haven. But I'm definitely getting off track, and I'll let you go back.
Oh, no problem. No, that's a good question. Like I said, I apologize. I don't have the answer for you offhand, but I'll find that for you tomorrow.
Thank you.
So on page 26, the third line up from the bottom just shows the change in net position by enterprise fund during the year. I would point out that healthcare facilities, which includes the hospital, had a a great year of $3.3 million, which took them from a negative net position, 1.4, to a positive net position.
But could that include the influx of that 1% sales tax, or would that just be their revenue?
That,
Because we do influx to them 1% of our sales tax.
and I think that's recorded in the transfer line, because just because if you look at the total revenues of 24.5 million, that's a round number, and KPMG presents their financial statements in the thousands, so that number is strictly would be their patient revenue. So the 1% sales tax, I believe, is in that $1.4 million transfer in line.
Okay, thank you.
And what that number is the year before, I don't have that information, but anyway, yes, the city's contribution is obviously a large portion of the net income of the change in that position, the increase. And then page 27 is the statement of cash flows. Page 27 and 28 is the statement of cash flows. After that is the notes of the financial statements that goes all the way back to the required supplementary information tab. This is just additional data that helps supplement the financial statements a little bit more detail. It gives you a breakout of changes, in cash, what looks at the cash and investments, capital assets, changes in the PERS liability, things like that. So if there's anything in there you want me to cover, I'd be more than happy to. Once again, it's just all data that supplements the actual financial statement data.
I saw our PERS liability increases each year, obviously. Do we track that? I mean, how does that liability how does the increase in liability get calculated every year?
So the PERS plan is audited as well. It's audited at the state level, also by KPMG. And that plan is audited a year behind, essentially. So state's 6/30/20 year ends, KPMG is auditing the June 30/19 plan, just due to timing, because it takes them 9 months to do the audit. And so this information related to this is a year behind, and that's where the deferred inflows and outflows you see in the statement of net position come from.
Okay.
Because they track the city's contributions, or everyone in the PERS plan, their contributions during 20, but they're auditing 19's numbers. So the liability, and it's a million things go into that. There's actuarial assumptions based on how old people, how long they think people are going to live, how much they think it's going to cost. So that number is essentially, it's supplied to us. The state puts out, or KPMG gives an audit opinion on the PERS. There's also TERS, but that's teacher retirement. We take that data, and there's, I think 155 governments that participate in PERS. We highlight your number, we run it through, once again, the change, there's a number of things. Pension is one, and then in OPEB there's 3. There's retiree, there's ODD, AR, CHT. So we just take that financial data and run it through, and it's all just essentially supplied to us because it's gone through its own separate audit.
Okay. Thank you.
And so yes, starting on page, the footnote's about 15 pages long. It starts on page 53 and goes all the way through 63. But if you look at page 62, it shows the bottom right corner, your total share of the pension liability is 8.5, and then essentially OPEB is separated, as I said, AR, HCT, ODD, those are a lot smaller numbers, but in total, the net is $8.8 million. And once again, the city contributes 22%, the state makes an on-behalf contribution for, up to the required contribution above that amount each year. And we can look on the state's schedules even further back how much they made. They made an on-behalf contribution of $315,000 during the year.
Great, thank you.
After that, the required supplementary information tab. Page 71, the first page after that is the general fund budget actual. Once again, RSI, there's required supplementary information is the management discussion analysis, budgetary comparison schedules for any major funds, and then contributions to the PERS plans. Once again, this is just a little summary of original, final, and actual for the general fund, and behind that is just required information about PERS disclosures. There's four tabs related to that. After that is the additional supplementary tab. Helpful in here, once again, your constituents probably want to know, or you guys like to know as well, this is a detailed budget actual for the general fund final versus actual, 6 or 7 pages of detailed information for the general fund. And then behind that is the non-major governmental funds in the aggregate, a balance sheet and P&L, combining balance sheet and P&L for each of those non-major governmental funds. And behind that, starting on page 87, is a combining non-major enterprise fund schedule. So water, wastewater, and parking are your non-major enterprise funds that are combined in the aggregate. On page 94 is the schedule of expenditures of federal awards. You see, we expended $3.5 million of federal money during 2019. We audited as a major program the Seward South Harbor launch renovation program, and the storm surge, the FEMA storm surge. So overall, we audited roughly, almost $2 million out of $3.5 million. Those are 2 major programs. And then behind that on page 96 is the schedule of state financial assistance. We spent $2.3 million during that year, and the grants with the little asterisk next to them are the programs you audited as major programs, the biggest being your breakwater expansion. Behind that, the next tab is the statistical section. One of the requirements of the CAFR, in order to get the certificate of excellence for the CAFR, you have to prepare, the management has to prepare. So management prepares the transmittal letter, management discussion analysis, and the statistical section shows 10 years worth of information on a number of different areas: financial, revenue, debt, and demographics.
It's good material for grants and just general knowledge for citizens.
Mm-hmm. Well, it's nice because, like I said, the financial statements show 1 year of information. The stats section shows historical trends over 10 years. So, you can see how fund balance is changing year over year. Revenues have changed, expenses, things like that. So. After that is the single audit tab. There's 2 letters. The first one is our report on government auditing standards. After that, uniform guidance letter. But for you the details. But I mean, if you have questions, I can talk about them. But page 128. This is the federal schedule of findings and question costs. This is essentially our summary over the financial statements. So as I said earlier, an unmodified opinion over the financial statements. You'll notice a material weakness was identified. We checked yes there. We'll talk about shortly those findings. Unmodified opinion over federal awards, and no findings over those 2 programs that we audited for federal compliance. Page 129 is our the schedule of findings. So there's 2 findings, or 2 areas that we noted as deficient during the year that we gave you a material weakness over. The first being lack of internal control over year-end inventory balances. So essentially 2 things. When we looked at the inventory balance in the Electric Enterprise Fund, the pricing, there wasn't adequate support over a number of items that we tested. We get there's a big inventory listing of essentially balances that you have on hand. So that needs to be tracked so we can accurately report on it. Same thing, we just take a random population or a sample of transactions or items that we want to look at to price to make sure they've been adequately priced. There wasn't support, unfortunately. Part of it is, and we see this on a number of our clients, some stuff you get, you bought 8-10 years ago, and that stuff just gets lost, unfortunately.
Like stuff in our yard that doesn't have receipts.
And there's just, there's big items, little items, and like I said, we still in the shuffle of time. We couldn't, the electric department couldn't find support for those. We were able to do, enough digging or other alternate procedures where we were able to place reliance on the balance. And then we ended up posting an adjustment. There was an error in the calculation. This is less of a problem. There was an error in the calculation of the ending balance, that we noticed while we were looking through it and posting an adjustment to properly state the balance. But, we've talked to manage about what needs to be done moving forward. With each of these findings, management's required to come up with a corrective action plan, which is included in the back, 3 or 4 pages. The very last page of the report where management essentially responds to the finding essentially, and it's a requirement on how they're going to correct it and mitigate it going forward. And then the second finding on page 130, page 130 is essentially a lack of internal controls over year-end close procedures. Essentially, during our audit, we posted a number of adjustments to properly state a number of account balances. We posted adjustments to capital assets, accrued interest, cash, debt, inventories, previously stated, and sales tax receivable. So, this is caused by a number of factors. Turnover. I know there was turnover in your finance department at the end of last year. Turnover during the audit. Complications with COVID. The city had hired a contractor to come up help with some of the year-end close procedures. That didn't happen due to COVID. So, once again, management has responded to that. The city has hired another contractor to assist, I think, with this, for this fiscal year 20 close. So, once again, they responded on how they're going to correct and mitigate that going forward. So, as part of our audit procedures next year, we're required to look at these, and essentially then we'll have a schedule of, in the next cap, or a schedule of prior audit findings saying whether those findings have been corrected or if they'll be repeated. So that is the end. Well, and then I'm sorry, on page 133 is the state schedule of findings and question cost. Once again, shows to give an unmodified opinion over state compliance, and there was no findings related to our audit of those 4 compliance programs. And then on page 134 is management's corrective action plan. So that is the end of the financial statement. So if there's any questions, I'd be happy to answer any of those. And then after that, we'll talk about the letter to the governing board.
Councilmember Seats?
What about the adjustments? Is that something we can see?
Yes, they're listed in the letter to the governing board.
Oh, this one here, on this one?
Yep, the
Okay.
smaller packet, yes.
Okay. I didn't read it. Okay, thank you very much.
Are there any other questions? Does the administration have any questions or further comments?
No, really, the reconciliation and closing out process is actually better when you do have a good audit firm, and it kind of keeps you true. And yeah, we went through a lot last year. It's been challenging. It's been really good to work with, and our staff has had to step up, and it's been an interesting year, that's for sure.
Well, and then on page 134, like you were saying, the corrective action plans for those 2 findings, it already says that the completion date was September 30th. So it sounds like those have already, I see administration nodding that those have already been implemented.
Yeah, they were more like year-end closeouts, kind of do the reconciliation. It's something that I didn't want to burden Sam with, and I didn't step in and do because COVID. And that's when we went out and found Malabin and kind of got it all. We have an external department head, if you will, as an interim that does all of our end-of-month closeouts and stuff. So Sam and I aren't stuck doing a lot of the day-to-day month-end closing. So we have a CPA that does that for us. And of course, ideally, we would have an internal person that's a department head for long-term. I think we're back to like the 5th or 6th place in Alaska right now looking.
Yeah, there's a lot of competition out there or there's lots of our clients that have openings, so it's definitely
Challenging.
a challenge, yes, to fill this. We see it across the state. The good news is Seward is a beautiful place, and so that works in your favor for sure. So.
And on the road system.
Yes. Yeah. Okay, so I'll move on, and we can come back to the financial statements after we, talk about the adjustments and things like that. If there's any other questions, I'm more than happy to come back and talk about anything in the financial statements. So.
Okay.
So the letter to the governing board, I'm sure you've seen this in the past. It's required communication with every single audit. A number of things that we talked about. The very first paragraph, very similar to our audit opinion, just talks about what we've audited, what we didn't audit. There was second paragraph, management's responsible for the selection and use of appropriate accounting policies. We talked about the accounting policies and the financial statements. No new policies were adopted during 19. Accounting estimates, this is a big one that I like to talk about. You know, management's required to come up with certain estimates during the audit or during the year essentially, and it's our job to audit those estimates. So the biggest estimates that management's required to come up with is the estimated useful life and depreciation methods of your capital assets. You know, there's a number of depreciation methods you can use. You guys use straight line and then coming up with the expected useful life. Same thing, we just look at those for reasonableness and consistency from year after year. Had no problems with those. Management's estimate of the city's proportionate share of the collective net pension and OPEB liability. And as I talked about before, we essentially say this is management's estimate, you know, even though management really doesn't get a say in it since it comes from the state, but it is really truly an estimate. And once again, I know it's not management's estimate, but we can't say it's the state's estimate because we're auditing your financial statements. But that is just really truly an estimate of that liability.
Okay.
And then the estimate of the allowance account for on accounts receivable, essentially what your bad debt or what your what percentage of accounts receivable you're not going to collect. So we just look at that once again for reasonableness and consistency year after year, and then once again make sure we consider it reasonable. Below that, we encounter no difficulties in dealing with management. Down at the bottom of this page, corrected and uncorrected misstatements. So, you know, during our audit, once again, we have materiality. So if we find something that we consider, you know, if we find a material adjustment, it has to be posted. If we find things that we consider lower than materiality but greater than trivial, and you know, and trivial is once again just a percentage of materiality, so it changes by opinion unit. So if it's below materiality, below material but above trivial, we're able to accumulate those in total, just, you know, to look at them, you know, because you don't want to post, you say for hypothetically you find 5 we call small adjustments, you don't necessarily want to have to post all those if you don't have to. So that was one essentially uncorrected misstatement, but it was considered, you know, immaterial. So large adjustments that were posted, and sure, some of these, you know, 13,000 in the grand scheme of your financial statements isn't very big, but some of these, you know, just had to be posted, you know. So the first one, 13,000, the correct beginning fund balance in that capital project fund. 228,000 to adjust interest expense and accrued interest across multiple enterprise funds. Essentially, that's just properly stating accrued interest on your bonds in the enterprise funds. 536,000 to adjust capital asset balances and depreciation expense. That, you know, was just essentially accumulation of errors over time. Once again, as I said, we can pass on if an account balance is misstated but below materiality, you can technically pass on it. You know, and this is, you know, in the enterprise funds, you know, your enterprise funds all have huge balances. You know, as I said, you know, $50 million of those. So materiality is a very large number in those funds. And what had happened, because we looked at, you know, the prior year capital asset balances compared to the financial statements, there'd been differences carried forward. I'm not knocking anyone. It's just they'd been passed on, and we said, hey, this is first year. Let's just true up every enterprise fund, every the governmental fund assets, so that they're true. Once again, we knew we were going to post some adjustments, so let's true it up here, and so then each year moving forward, they're on track. So that was just an accumulation of just little differences across multiple funds.
That's a good explanation. Councilmember Baclan, did you have a question?
So overtime meaning overtime of the year, or for,
previous years, I think, because once again we compared the capital asset listing that was, you know, because we look at a capital asset listing that shows 12/31/18, and then management puts changes to it, you know, any additions, deletions, depreciation expense, and that's tracked by, you know, governmental activities is one. And then each enterprise fund has a capital asset listing. And so if we compared that, the 12/30/18 balances to what was in the prior year financial statement, there was a number of differences. And same thing, that's not unheard of because, once again, you know, running a $10,000 adjustment or a $20,000 adjustment through isn't necessarily required because it's immaterial. And so, once again, we just noted that there was differences that hadn't been corrected that were just brought forward over time. And once again, the spreadsheet, and this isn't not going to, the spreadsheet for a city your size is, you know, hundreds or thousands of lines, you know, deep across multiple years. It's just, you know, errors happen. So once again, since we were posting adjustments and it was year one, we just wanted to bring everything in line. I believe we provided Sam with the updated listing. If not, I'll touch base with you after. get that, and then make sure, you know, then going forward, you know, additions, deletions, depreciation expense can be tracked and, you know, should be trued up.
Just like a reset.
Yeah.
It's hard with like a building, like unlike a vehicle that depreciates pretty consistently and has a known value. Like if you put sidewalks and elevators and systems in the buildings, you really need to track the additions as well as the depreciation, and it's kind of a property values rise, so it's hard to keep a finite.
Sure. And like I said, there's just so many things to keep track of in those, so. 130, the last one on this page, 136,000 just to adjust, you know, grants receivable on the SCH Special Revenue Fund. 430,000 to adjust cash in the due to froms in the general fund. Sorry, the top of page 3. 360,000 to adjust interfund charges and accrued compensation, since accrued leave in the internal service fund. The 624,000 to adjust pension OPEB liabilities. Truly, this isn't on management, but once again, it's adjustment posted to your system on our behalf, so it's listed here. But once again, we do the reconciliation of GASB 68 and 75. I mean, we have very few of our clients. Actually, we only have one client that can post that adjustment, and that's because she used to be an auditor, and she used to write governmental financial statements when she was an auditor. So it's nothing we expect our clients to know, because once again, we get the financial statements from the state and post that journal entry. Normally, it just, in the governmental activities or governmental funds, it just shows up in the government-wide. For your enterprise funds, they operate on the full accrual, so that adjustment is posted actually into your general. That 624,000 just relates to the enterprise funds. 88,000 to adjust multiple, you know, accounts receivables and associated revenues in the general fund, and then 300,000 to adjust inventory in the electrical enterprise fund, as previously noted. And then below that, there was just an understatement of depreciation expense in the electric enterprise fund. And that just goes back to carrying forward of an error. Depreciation expense should have been 37,000 higher, but as we were just adjusting the previous balances, we just had to leave it off during the year. So hopefully that answers your question, but I'm happy to provide any more detail that I can.
My only, the opposite side of your corrections is, can you tell us what your balance was between the two that you credited or debited? I mean, into how much did you end up adjusting? The better sewer or the lesser sewer?
Well, you know, we try, well, and that's a hard question to answer, I guess. And so I guess we should, you're correct, I should have been better about saying adjusted it up or down. In the aggregation, you know, since we don't put debits and credits, truly I don't, you know, I can't answer that, I guess, because some of these things, it's like the adjustment of 500,000 to capital assets, that's probably a conglomeration of multiple debits and credits. You know, we probably debited, increased the number of assets, but at the same time maybe credited some of the same assets. That's just a total of the adjustments to capital assets. Same thing on, which one is it? The interest expense of 228,000, I posted those entries myself. Those were probably, I'm guessing, decreases in interest expense would be my guess. But once again, it's probably, I think there was 4 or 5 adjustments that go into that number. Because once again, each year, your accrued interest should be lowering, you know, as the debt is paid off. And so I'm guessing, per se, that would be for the betterment of the city, a reduction of expenses, you know, after the adjustment than what was in the general ledger to start. I'm guessing the 136,000, the bottom one, would have been to increase grant revenue and book accounts receivable in that fund. And then the 360,000, so the cash, I'm sorry, I couldn't tell you if this is debit or credit, I apologize for that. Because once again, I'm guessing if we post multiple adjustments to the same accounts, it's just a total as opposed to a net difference. Because if we netted them, the debits and the credits, it's very possible these numbers would get down to an immaterial number, and then it would be, I don't want to say pointless, but then we very possibly wouldn't post the adjustment.
Thank you.
I'm trying to get a question, but I just want, are these adjustments are reflected in this report?
Correct.
Okay.
These are
So
adjustments
yeah, so.
posted by management. The last one, it says summarized below is in the statement, that we've determined, management and the auditors have determined to be immaterial, and that was, once again, the depreciation expense that wasn't booked.
Councilman Rosen, Pecan?
So I get this is all like little things that are occurring, so it's a net of debits and credits. So then how would I go back and look at the budget or what could I find the corrections from the numbers that were before to the numbers that are now?
You would have to get detailed information from management. I mean, the numbers that are now are in the financial statements. And once again, these are, so when we say cash is $12 million in the general fund, there's multiple accounts that go into that. But once again, I work for you, management works for you. I could provide you a list of every adjustment if you wanted to see true debits and credits for each of these, or Sam or Scott could provide you detailed information. If you wanted,
But you would say in your findings, they would be minuscule or not.
Well, I guess it's how everyone looks at it. They're material. So there's two types of findings, and I should have went into that. Well, there's three types of, I guess, errors. There's control deficiencies, significant deficiencies, and material weaknesses. Control deficiencies would be something we considered an isolated instance or something that wouldn't rise to the level of needing to be written down and disclosed publicly. Maybe a discussion with management, hey, we noticed this one error. As I said earlier, we found one person was mispaid overtime. We tested an additional 20 transactions specifically related to overtime and said, hey, we think this is an isolated error. So we consider that a control deficiency, not written in your financial statements. A significant deficiency would be less severe than a material weakness, but still reportable. A material weakness usually would result as a material misstatement in an account balance. As you can see, some of these adjustments are large in total, and so that's why we gave you a material weakness in internal control of the year-end close due to multiple material misstatements of account balances. So I could, once again, we could get you we have an exact listing in our work papers of each adjustment. And once again, just really for ease of use, and I guess maybe that's a presumption on my part, well, some of them have been rolled together kind of total, just, for ease of use. For example, like you said, there was 4 or 5 adjustments to interest expense and interest payable in the enterprise funds. I could list the same thing 5 times with different amounts or just one. So, it's kind of our approach to that's netted with credits. So I don't know if that answered your question. But like I said, if you wanted to see a listing, we could get you that. But these, as I said, all these adjustments are reflected in the financial statements.
Thanks.
So you have 3 minutes because we're going to take a break before the
I don't have
council
3
meeting.
minutes. I
Okay,
just
good.
want to
That's
ask,
great.
is that like just pushing a button to get that, or is that you have to go back and do a whole bunch more
Nope.
work?
It's a generated report that's in our work papers, so we can provide that.
I would like that. Okay.
Well, we appreciate your time during this work session. You're going to stay with us and give a 10-minute presentation during the regular meeting. I'm going to go ahead and adjourn this work session, and folks have about 6 minutes to take a break if they'd like.
Okay.